Everyone knows that capital should generate more money. And the choice is endless. Stocks, bonds, ETFs, real estate funds, real estate, cryptocurrency, and the list goes on and on. And with all those thoughts in mind, you go on vacation and suddenly have an idea. I will buy a property in a tourist destination to make money off tourists. That works, right? Let's find out. Hi everyone, I'm Artem. I'm a co-founder of Insight Estate, where we help foreign investors to pick the right properties in Thailand for investment purposes or for lifestyle purposes. Stay tuned. So let's explore 4 different strategies where you can invest as a foreigner to an overseas property and make money out of it. I'm based in Phuket, so I will have Phuket as an example. But this might work in any country you are considering right now. So in Thailand, as a tourist destination, we have 2 main strategies how we can make money from our investments. Number 1 is short-term rentals, for example, for tourists who are coming for a week or 2-week vacation and they just need to stay in the hotel or an apartment for a few days or few weeks. That's a short-term strategy. And the second one being a long-term lease, where you rent out your apartment for, let's say, a month or more, or even for a year contract. This might involve digital nomads coming to spend winter here, or it can be just a family who is moving to a new place and needs a house or an apartment to live full-time. The annual lease is for those type of clients. In Phuket, a very popular strategy is short-term rentals, just because people are coming here for vacation mostly. So when you are buying a unit from a developer, you might have 2 main systems of monetization or 2 main methods. Number 1 is the guaranteed income. Let's imagine you're investing $100,000 into a unit. You buy this beautiful unit and the management company, Radisson or NH Hotels or Ramada or Hyatt, whatever, the hotel operator manages everything and gives you a guaranteed return of, let's say, 5 or 6%. So usually it's in this ballpark, and the guaranteed returns are guaranteed for 3 to 5 years. The key advantage here is the predictability, of course. You know how much money you will make this year, next year, and the years to come. Next short-term strategy is the so-called rental pool. It's almost the same situation. So there is a hotel operator who manages the whole building. Let's imagine the building has 100 exactly same units. So the management company rents out one of those units and making $100 profit out of that. So each owner will get $1 out of this 100. $100 is split to 100 owners. For you as an owner, that's a very favorable situation, because if your particular unit is not renting out, you still get money from the management company. The management company combines all units of the same type into one pool and rents out to the end clients. When one unit is being rented out, all owners in this pool are getting a fraction of the profits. Comparing to the guaranteed income, you are not sure beforehand how much money will you make, but it gives you a very balanced approach to your property. For example, if something happens to your particular unit and it's not renting out for 3 months, you are still making money. If you go with the rental pool model, make sure you understand how the management company will pay you. Some are calculating from the gross revenue, some are calculating from the net revenue. So make sure you understand what is the basis for the calculations of your rental income. As a rule of thumb, in Phuket, management company are looking at the net revenue, and they are getting 30% of the revenue and 70% is going to the owners. This rental pool strategy gives you higher returns compared to the guaranteed income, but we will compare everything in the end of this video, so stay tuned for that, please. We're just halfway through. I guess you can see it's not that straightforward, and choosing the right property and the right strategy is critical in generating proper returns. Make sure to subscribe to this channel, and probably you may want to check this video about the best performing projects of Phuket, Thailand. And now we are moving to the long-term strategy, long-term leases. So I would cover two things here. One is a very simple annual lease, when you lease your property out and just forget it. And the second one is leasing for the high season and using your property for yourself for the balance of the year. Let's start from the annual lease or long-term lease. This strategy involves either a management company who is looking for tenant and then making sure the tenant questions are being answered, or you can do it yourself. So you can pay someone to do the work, or you can have a better returns but managing yourself. Usually when you find a tenant for a long-term contract, they pay you in advance 2-month rent as a deposit and 1 month's rent before they move in. So you have, let's say, an emergency fund if something happens, and this 2 months deposit you are not allowed, obliged to pay back if the person breaks the contract and wants to move out early. It's up to you whether you want to give this money back. For this strategy, I think the biggest advancement is that it's very easy and predictable. You find the tenant one time, this tenant might be renting out for a few years to come, and you enjoy your monthly payments. Again, it's very predictable in terms of the amounts. In the beginning, you might have some questions, but then you just get money flowing in without any management company or someone else doing the job. People just rent out and live there. In Phuket, there is another very popular strategy, is renting out for the high season, which is between, let's say, November and March, especially December to February. In terms of the strategy, it's all the same as the previous one. You need to find the tenant who will rent out for like a number of months, or a few tenants, each of whom will rent out for a month or so. This strategy is very popular with Australians. During December, January, February, it's summer back in Australia. They live there. They rent out for the high season, for the peak season, for the highest prices, still get like nice returns. We'll check the returns later on, and enjoy this property on their own during the winter time in Australia, for example. So if you are flexible in terms of timing and you want to use the property yourself, you can enjoy quite high rental yields from the peak season and use the property yourself for the lower season. So as you have probably noticed, these are 4 very different strategies, and they all work, they all deliver, but you need to be very clear in the beginning what is your strategy and what you want to monetize and how you want to monetize it. And this also affects the property that you will acquire. Something for a long-term lease is very different from something for a short-term 1-week vacation. So let's compare the 4 options in terms of the rental yields. The numbers here are just to give you the idea on average how each strategy performs. Based on our internal benchmarks and market averages, here are the numbers for 4 different strategies. We take as a base $100,000 unit, and here are the returns. So let's start from the least profitable. This is the rental for the peak season only, so just few months around New Year. Here the returns are on average 5.3%, about $5,300 a year. But at the same time, you can use your property for the majority of the year, and the wear and tear of the property itself is much lower versus other strategies. On the 3rd place is long-term lease. Again, on average, a $100,000 unit will deliver 6.8% or $6,800 a year as your rental yield. So 2nd place, guaranteed income. On the higher side here, you can expect around 7% annual rental yield. That gives you $7,000 in passive income. So in Phuket specifically, the most profitable strategy on average, as you might have guessed already, is the rental pool. So rental pool on average will deliver 7.6% annual rental yield, which is $7,600 a year. If we are looking on the investment map, Thailand is red hot right now. A lot of interesting projects, a lot of rental yields possibilities. So if you want to check the best ones for you, make sure to check the description and click on the link to get a free consultation. I will be happy to assist. See you in the next video. Maybe this one is your next video.